Hey everyone, Brian from Bear Bull Traders here. It is the weekend yet again, August 12th, and hope everyone's having a good weekend. This, of course, the weekend video. We'll take a look at what happened last week, and then we'll move on to look ahead at what we got coming down the pipe this week. So, interesting week last week, and let's get down and take a look at what happened. Okay, let's start out by taking a look at what happened last week, August the 7th. Earnings season continued to chug on here. We do have some notables that are still coming up to report, like NVIDIA. But we did get the CPI data. It did come in a little bit lighter than the expectations, and that gave the markets a little bit of a cause for a rally Thursday. However, Friday's data, the PPI data, which is your wholesale um, prices, they ticked up unexpectedly. The expectation was zero point 0.2, and I think we got 0.3. So that's just showing inflation still a little sticky, particularly on the wholesale level, which obviously can get passed on to the consumer level. So you combine that with oil. Oil is really going up this week, and we'll talk about that a little later in the video. But that's not a positive thing for the overall inflation fight. You know, oil impacts a lot of prices of goods that we get, and you know, both for the production of them and for the transportation of them. So that's got to be a little bit of a concern in terms of inflation as well. So the Dow was the only index that actually finished up on the week. Sorry, I didn't spell index right. But you can see here we did eke out a gain on the Dow. The Qs actually in the SPY, 2 negative weeks in a row here. That's unusual for 2023. You can see there energy and healthcare sector, biggest gainers on the week. Consumer discretionary and technology were the biggest losers. Of course, they were taking a hit because the 2-year Treasury ticked up, and so did the 10-year, now sort of well above 4.4%. And people are watching this 4.25%, because if we start to see it tick much higher than that, that's sort of a level that's been set in the past as a high. So I'd be watching that 4.25 level for sure, because that will certainly put more pressure on the markets. US dollar, with the increase in the yields, obviously it usually goes up when yields go up. And Bitcoin up a little bit from last week, I should say, 29,400 is where it's sort of settling out here, versus the 29,000 we did have last week. Looked like it was on the verge of breaking down there, but we managed to come back up. So that's how things looked last week. Let's take a look ahead here at what we got in terms of the indexes now. And before we get into looking at those charts, just a quick plug for my book on Amazon, Profiting as an Active Trader. You can check it out there, Rules, Strategies, and the Routines of an Active Stock and Option Trader. And yeah, check it out if you're interested. So let's start looking at some charts. Starting out with, as always, the 2-year Treasury yield. And you can see here we're still banging along. There's not a lot of movement. It's been happening over the last, say, almost 2 months now. But still not pulling back, but just sticking in this range. So we're waiting to see if there's going to be any further rate hikes by the Fed. There's sort of a debate going on. First, it was maybe with the CPI data, it was going to be another hold, but now with the PPI data, maybe not. So again, jury's still out on whether we're going to get rate hike here again. Here's the 10-year, again, as I mentioned, creeping up. It is getting very close to this high that we put in back in December of last year. Again, if we start breaking out above this level, I think the markets are really going to roll over here. So again, threatening to break out, and just everybody should be definitely keeping an eye on that yield this week. The transports, again, pulling back from their high in July. We've lost a moving average here. We do seem to be trying to hold in this range. There's been a lot of buying. You can see the volume buying and selling in this range. We're at the bottom of this range here, so I'm thinking this is a pretty critical level. If we start to break down, this is going to be a further breakdown in the transports. Of course, transports being a indicator of economic activity. More stuff gets moved around, the better for terms of what the economy looks like. So you can see here that the Dow, we're really stuck in a range here, and that's why these option trades have been working really well. The highs have been sort of established, but the market doesn't seem to want to sell off. So you can sell, if you can find good premium, you can sell puts and calls. Here's the Dow on a weekly basis. Again, you can see here for the last 3 weeks, really been stuck in this range. No big sell-off, but on the other hand, we've just had this big run up in the first half of the year, and now we're kind of churning sideways. The Qs, however, are continuing to roll over after we put in this lower high on the daily. And you can see here we are starting to pull back into a range here. You can see there's been a lot of buying and selling in this range. You can see the volume weighted, the volume and the price in this range. So we could pull back further into this sort of 360 area. Volume's been pretty steady in terms of trading volume, but you can see here the SPY, same thing. We are getting into a heavier area of where volume has been transacted, but that's a little bit further down here. So again, the SPY really looking, still looking a little weak. This has really broken this uptrend that we've been in for the first half of the year. And again, this 440 level looks pretty important right now to me, somewhere in the 440. And we came down. Looked like we came down on the week and kind of touched it and bounced off it. But again, things seem to be a little bit dicey. IWM, actually, this was pretty much a perfect gap fill. You can see when these gaps happen, you often get a pullback and a fill, and that's where you'll find support. So that's what's happened right here. We've had a bit of a bounce, but so again, this area right here is pretty critical to hold, or we're going to go a lot lower here. On a weekly, again, you can kind of see it there. This sort of 190 area is really area of critical support for the IWM. But on the other hand, this is the fear index, and you can see the fear index again. Just really no fear of sell-off. It's kind of been orderly, so no fear in the market as a big sell-off. The dollar, you can see here breaking out. Of course, as yields go higher, the dollar becomes more attractive, and the dollar starting to punch out here. And you can see this is where we've had prior resistance before, up in this area. This sort of 129.60 came pretty close to it on Friday. So watch the dollar. Dollar threatening to break out. Of course, that's not going to be good for emerging markets. It's not going to be good for gold, silver, sort of commodity plays. Oil's been fighting the trend, even though the dollar's been going up. Oil's been going up along with it. That's probably more of an issue of supply and demand. And you can see here Bitcoin trying to quiet on the weekend, 29,400, well off this low that we put in here last week, 29,000, where it threw a bunch of wicks, but then came back up. And we had a big pop here on the, looks like the 8th of August, came back up, and then we pulled back. And Sam Bankman-Fried going to jail apparently for violating his some of his parole, or not parole, his release requirements. So anyway, that's side story. So let's take a look at some stocks that I've got on watch for this week. We'll take a look at our on watch index list. So you can see here, Apple's really had a big pullback. We had the earnings come out, and it's a week ago, more than a week ago, and it's really pulled back significantly here. It really was struggling over the last, since early June. It was really struggling to make a move higher here. I did have some calls sold at one point up in this area, and it just really pulled back. And it does seem to be putting in a bottom here, sort of this 175 area. There's a heavy area of buying down here that's a little bit lower, but it does seem to be trying to hold, sort of this 170, 175, I think it is. So let's keep an eye on this area, or this 177, maybe 176 area. Keep an eye on this area. It could sell some 175 puts maybe. And if you wanted some protection, maybe buy the 170s just below it. Check the premium out on that. and maybe that's a good vertical that you could put on with Apple. Airbnb. Okay, so wrapping things up. Let's go. What do we got coming down this week? You can see there's your indexes with the relative level of support and resistance there. For economic events, we do have some retail sales and import price numbers on Tuesday, housing starts and permits, and then we get the 2 p.m. July minutes from the FOMC meeting. That usually causes a little volatility in the afternoon. Jobless claims Thursday as usual. Then we get some leading economic indicators for the U.S. at 10 on Thursday as well, and then there's really not much on Friday. So pretty light on the economic events this week. In terms of earnings, we do have some interesting stuff here. We've got Home Depot on Tuesday, we've got Target, we've got JD, TJX, and Wednesday, and Cisco after the close, and then of course we've got Walmart. Walmart's been really strong. We've got another semiconductor here, AMAT, after the close Thursday. And some of these Chinese EVs companies that have been in play a lot, XPEV on Friday morning. So we do have some interesting earnings coming up this season. Certainly, there next week. We certainly not what we've had in the last couple weeks, but still have some. Should be some fun here next week in some of those names as well. So that's it, everybody. Have a great rest of the weekend. Hopefully, we'll see you 8 a.m. Monday morning. Engineering the Markets with Jared on live on YouTube, and then of course our pre-market show with Carlos and Peter at 8:30, and then Trading in the Market Open with myself and Andrew on at 9:30 when the market's open. So we'll look forward to seeing you there, hopefully. And yeah, have a great rest of the weekend. Bye for now.